Hey everyone, welcome in to another daily editorial here on the KE Report. I'm excited to announce a new guest on the show, Michael Gray, partner and head of equity research at Agentis Capital. Agentis Capital is a global independent financial advisor. Now, I wanted to bring Michael Gray on for a couple of reasons. First, to introduce Agentis Capital and get some insights on mostly the mining sector, because that is a lot of the focus where Michael focuses, and also highlight a breakfast event that is happening January 22nd at 7 a.m. Pacific time. Michael will be hosting a fireside chat and a bit of an overview with company presentations focused on the Tombstone Gold Belt. So I do have a link that you all can register and watch that event live when it happens on the 22nd. We'll talk a little bit more about that later. But Michael, first and foremost, since it is your first time on the show, can you give us a bit of a background on Agentis Capital, please?
Yeah, no, thanks for the invitation to come on, Corey. Agentis Capital is a research and advisory firm, all ex-Macquarie individuals. So we formed the mining partnership 4.5 years ago when Macquarie exited Canada. So we are Vancouver and Toronto offices. There's probably about 45 employees, including all the infrastructure team. The mining team is 6. I do an equity research product, independent research. We cover explorer developers and some producers. And then we have an advisory arm as well. So this is a pivot from Macquarie big bank style of research, but the same quality and the same philosophy of looking for best of breed opportunities. So that's Agentis in a nutshell.
Now, one thing that I like about Agentis is this is truly independent research, correct? You and your team look at companies and provide this research without a whole lot of outside influence from companies through any sort of financial support. Can you outline that model, please?
Yeah, very similar to the independent banks and boutique brokerages. The revenue source is largely from financings and advisory work. So we're no different from those independent sources of research. But I think we have a respected product. It's institutional grade, and we have a global distribution of this product. A lot of thematic research. And I've been doing this 18 years, so kind of got this refined down to how we like to attack jurisdictions, themes, and therefore a high quality of assets. Assets with really good pedigrees. And we do like to traffic in early stages of greenfield discoveries, navigate those for investors, and try to deliver superior returns.
So on the mining side, then, in terms of metals, where is mostly your focus and Agentis Capital's focus?
Right now, it's really gone to risk-off jurisdictions, Canada, Australia, United States. We do cover some assets in PNG with K92 coverage, but it's quite focused. We're very risk adverse right now jurisdictionally.
Now, I guess that ties into kind of the main themes. I did want to get your insights and maybe a little preview to a little bit of your presentation from that breakfast event. Talk to us, please, about the main themes that you have been focused on, especially in the mining sector, which I think we're all aware, all of the investors in the sector, that it has been a fairly tough couple of years for a lot of resource and mining companies.
Yeah, it has been. And so what we've done since we founded Agentis was really focus on, say, certain batting cages, jurisdictions that we thought could be very prolific. So we started in the Golden Triangle of British Columbia, Canada, and have had success with GT Gold being taken out. We did transition that coverage from Macquarie. So we really started to look at the copper gold plays like Red Chris. We immediately were the first team to cover Skeena back in 2019. We covered Ascot, Dolly Varden, and eventually Imperial Metals. So we have a really good understanding of not only of the assets, the infrastructure, the First Nations dynamic in the Golden Triangle. So that was a big theme. And then a couple of years ago, we really pivoted to also cover the Yukon in a similar fashion. So, we cover Snowline, we cover Western Copper and Gold, and we covered Rockhaven up till recently. And it's important, I think, for institutional investors to appreciate, the motivations of senior mining companies getting into those jurisdictions or area plays The Golden Triangle has yielded over the past 5 years about $4.5 billion in M&A, with Bruce Jack and Red Chris being taken out or built. And we see the same thing happening in other jurisdictions, and that's the reason to focus on the Yukon. On commodities, we've really started more gold focused and then pivoted over the last few years more copper gold. And then we've also looked for if there are superior assets out there in the rare element space. We certainly picked up coverage of defense metals and have high conviction on that one. And then on the copper gold side, globally, we're very attracted to these attenuated porphyries that could not only have an open pit, but also a block cave. So very much emulating our coverage of GT Gold and Imperial Metals in the Red Chris area, Golden Triangle.
Now, what's your assessment of the overall health of the sector when it comes to the discrepancy between mining companies, which do seem to be making some decent cash flow here, development companies, which a lot of them seem to be stuck at that financing stage, and exploration companies where the financing environment continues to be difficult for them, and we seem to find or see less and less discoveries being made? How are you segregating the different main sectors within the resource sector and stocks?
Yeah, no, it's a great question. It was tough, a very tough year, especially last year. I think there's a number of reasons. One is, there's a lot of junior mining companies out there, a lot of mouths to feed, and there's only so many of them that are going to have high enough quality opportunities, raw plays, or even assets with retained value to push forward. So that's one thing. I think the other thing that has held things back is there's been a lot of competition for capital last year. And I think with inflation going up, interest rates going up, there's been other opportunities for investors. There's not as many investors, maybe demographically, things are playing out that are loving the junior mining companies and focus on the juniors. Certainly the institutions, the resource funds have concentrated portfolios and are not coming down the food chain into the juniors as much. The traditional players out of Bay Street or in New York are not coming down into the juniors. They might have had 80 positions at one point back in 2010, 2011. Now they've got 30, and they can only afford to have a few of those be the developers and the explorers. So I think that really impacts the interest in our sector right now. So there's got to be much more creativity to get capital, maybe from streaming companies, maybe from private equity, and alternative sources to sustain the businesses.
So since it is a much more selective environment, you're spot on with that comment. Does that mean you see it continuing this way? So the fact is that investors do need to stay focused on some of those higher quality projects, even ones that are arguably a bit more advanced?
I think that if investors want to continue to seek 10-time returns, 10 baggers, so to speak, those are really elusive. You've got to be super selective if you want to be successful there. So I think expectations may change. I've talked to a lot of fund managers recently, and they're happy with much more of an asset base and maybe not quite the return. But in a year like this, where we've got a nice tailwind on the critical minerals, we've got a pretty positive outlook on the gold price, those are the type of assets that I think are going to perform really well, as opposed to some of the little bit more binary exploration plays, swinging for the fences, which I generally love. But I think those are going to be a little bit tougher to finance, certainly in 2024.
Why do you think we've seen such a disconnect between where the gold price is, right around all-time highs, and where the broad stocks are, the gold stocks that are unfortunately nowhere near all-time highs, especially if you look at something like GDX or GDXJ?
Yeah, it's as much as the producers have been doing very well. The margins haven't expanded as much over the last couple of years as you might have expected. Inflation has eaten into that margin, but in general, I think we have seen a little bit of aversion to the gold only plays, the producers. I think that's part of the reason why Barrick has turned their gun sights more to copper. I think it's why Newmont was very keen on taking on board Newcrest for its copper exposure, along with its block cave technology. I think that will continue to be a theme. more copper for the ESG side of things and the acceptance of copper coming in and not hurting their multiple, a higher percentage of base metals. We've seen other companies like Agnico Eagle make investments in critical minerals. So I think that's going to continue to be a trend.
All right, Michael, let's start talking about that breakfast event. Again, January 22nd, streaming live at 7 a.m. Pacific time. You are hosting a fireside chat and company presentations, all focused in that Tombstone Gold Belt in Yukon. So some of the companies being featured are Snowline Gold, Banyan Gold, Rackla Metals, and Sitka Gold. What's your focus going to be presenting at this breakfast event and hosting it?
Well, there's really two sides that I'm focused on. I'm expecting an audience to be 50% technical and 50% financial. So I want the presentations to be punchy, informative. Only going to be about 7 minutes each for each CEO to really pitch to the crowd, and we'll have a little bit of Q&A on the back of those presentations. But I want it to be technically insightful. We've got senior mining companies there that are signed up. We've got a number of technical people in the crowd, but we also have, I think, a lot of people from the financial sector that are coming to Roundup and to VRIC, corporate development teams, et cetera, that want to understand this play a little bit better. So I want to be able to convey that message, a little bit more about the jurisdiction, the Yukon, and things that are happening, unfolding there, other than these four companies, in terms of a backdrop, and then challenge some of these CEOs on some of the opportunities and challenges in particular that they may have. Seasonality is an issue in the Yukon, but I'll have some charts that show that Yukon companies have generally outperformed the GDXJ, our benchmark, despite the seasonality. So there is something special happening in the Yukon. So I'm hoping that that gets conveyed very effectively through the fireside chat with these four CEOs.
All right, Michael. Well, thank you very much for taking time joining me on our show. I definitely want to get you back on our show more often so that we can cover what you're seeing within the sector and even in terms of some of the companies that you cover. But first and foremost, everyone, please sign up for that January 22nd breakfast event where you can watch the event live, Michael's presentation, along with the company presentations and that Q&A session. You will also get first access to the recording. So again, please sign up and send me any questions that you might have for the companies or any questions you have on the event or even for Michael. So Michael, thank you very much for your time today. I really appreciate you sharing some of your thoughts on the resource sector.
You're welcome, Corey. Have a great day.